to everyone joining us from around the world. Whether you are just waking up, midway through your trading sections, or waiting for the night, welcome. On behalf of the entire WeMasterTrade teams, we are truly pleased to have you here with us for this global live stream sections. My name is Daisy and I will be guiding you through this exciting 2-hour journey as your host. Today live streams is not just a presentation, it's a conversation. It's a window into the engine rooms, one of the most fast-growing and forward-thinking funded trading firms in the industries. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today: skilled traders, mentors, and role models within our communities. First, let me introduce the ever-composed, always insightful owners. Please welcome owners.
Thank you so much, Daisy. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rule, but about the ecosystem that WeMasterTrade offers, from how you start to how you grow to how you earn. This is the kind of platform that doesn't just fund trade, it builds traders.
Absolutely, and next to him is someone who brings sharp analysis and clarity to every chat and conversation. She's strategic, she's sharp, and she's a real force in our trading space. Please welcome Helen.
Thank you, Daisy, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me more about today is that we're going to unpack everything, not just what WeMasterTrade offers, but how the trader can truly take advantage of this part of our system. From packages to promotion to scaling and long-term profit sharing. If you ever had a question, if it does, today is the day to ask them.
And that's exactly what we're here for. Whether you are brand new to the WeMasterTrade or already a part of our funded trader programs, today live streams is going to give you the full pictures, not just the highlight reels. Over the course of these sections, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional broker or prop firm. Now, I want to be clear, it isn't about sales, it's about understanding. We want you to know what you are signing up for, what kind of structure supports of your journeys, and how you can use that structure not just suggest but scale.
And speaking of structure, we'll begin by sharing the story behind WeMasterTrade, how the world forms as a funding project, not a broker, which is a very important distinction. Unlike broker who profit from volumes or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in trader, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flow everything we offer, especially our trading package. We'll be discussing in detail. We'll explain the logic behind each one. What kind of trader they ever look at our package and through which one is right for me? Today we will answer that.
And more than that, we will also do a live comparison between packages. We will break down pricings, account size, maximum drawdowns, consistency rules, and even payouts side by side to help you make a fully informed decisions. It's one thing to see numbers on the website, it's another thing to understand the intention behind them.
Alright, and when you understand the packages, the next question is always, how do I stay compliant while trading? Also, we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We will explain what the daily loss limit is, how it's calculated and why it includes close and floating profits and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we even address common misunderstanding about trade sizing and risk per trade policies.
And we want to explain rule in isolation. We blend them in context of live trading session. I will share some personal example of mistakes I make when I first start trading under funded account condition, and how I adjusted because rule remain restrict you, they have to rotate you in the entirety of your flow.
And while we're on the topics of helping you suggest we will guide you through our current promotion plans, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have some amazing response to our promotions, but also some confusions. So we will be showing you exactly what to do step by step.
And from there, we'll transition into a discussion on our scale plans, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payout, you actually unlock higher capital tier. It's not just about getting funded one, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes it different from broad firm. When you trade on the funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage, where we plan the full payout cycle, result, and timeline today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with a large networks. That's why we are also taking time to explain our affiliate programs, and we do it transparently. We will walk you through how commission are calculated, how affiliate referral are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referees rules and minimum funding conditions.
This is especially important because we want our partner to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income stream.
So as you can tell, it's not just a surface level live streams. We are diving into everything: packages, rules, promos, scale-up packs, profit sharings, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want it to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching, and we will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we'll leave timestamp and summary below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
To grab us this welcome, I would like to say WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair, structured, and scalable pathways for people all around the world who are serious about trading as a profession, not a game. So if you're here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Thank you once again for being us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we built this platform the way we have. Because when you put in your trust and your tradings into the companies, understanding its philosophies isn't just helpful, it's essential. And so this next segment is about the origins, intentions, and impacts. It's about how WeMasterTrade began, what value underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to work through that, I'm chosen as a way by two people who live and grasp the principles, honest and talent. Let's start at the beginning.
Thank you, Daisy. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give trader access to capital, regardless of their background, location, and financial situation. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada, while WeCopyTrade Vietnam on signal sharing, investor network, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high-potential traders, giving them a broad way of earning professionally without risking their savings.
And it's important to know WeMasterTrade is not a broker. That's not just a label, it's fundamentally different. We don't profit from spreads or commission. Our success is directly tied to the success of our trader. That's why everything we have built from our instant funded packages to our profit sharing model is structured with alignment in mind. We take on the capital risk, we give you the roadmap, you bring the skill. But we also know that skill alone isn't enough, which is why one of our funding principles is education first. We don't want the trader to blindly follow all the rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychologies all the way to advanced risk calculations and multi-asset strategy designs. The WeMasterTrade Academy isn't just about theories, it's about the implementations. We design the curriculum to map the real-world trading environments within WeMasterTrade, so what you learn you can apply directly to your funded accounts. And to ensure that our system and contents meet global standards, WeMasterTrade is proud to hold an ISO certifications, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structures, and learner engagement.
And that certificate is a big deal because it's a long-term commitment to developing traders, not just collecting fees in an industry where many call it platform come and go. WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a season, we're here to help build career.
And we have seen that commitment translate into the real story. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa are talking about how WeMasterTrade have them not just earn more, but trade with purpose. They talk about the passion challenges after a year of struggling with retail broker. They talk about finally being able to trade without the emotional burden of risking personal funds. We had a student become full-time trader. We had a woman re-enter the finance world after career break. And we had young professionals from unbanked region finally access the markets with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regular list of that blog section where our teams of experts and educators sell quickly insight, trading psychologies, breakdowns, market reactions, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about the cultures. What makes the WeMasterTrade different isn't just the product offerings, it's the community mindset. We actively promote trader integrities with powerful competitions and knowledge sharings. Whether you are in the Telegram group, watching our YouTube series, or engaging with us online supports, you will see what we are actually listening.
And I speak honestly here in many platforms, the trader is just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business, your voice shapes the platform, and your consistency determine how far we can scale together. That mutual accountability is rare and is something we're proud of.
And if you ever doubt that is whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funded accounts, and connect with people who go through the system. The stories are real, the capital is real, and results speak for themselves.
And to summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education for trading institution. We are here to challenge the status quo of trading access, to build a system that rewards performance over promotions, and to create real, scalable income opportunities for traders all around the world, regardless of their starting point. This is more than a platform, it's a trading movement, and if you are ready to part of it, today's live stream will show you everything you need to know. Thank you so much and highlights for that tips and honest walkthroughs. Coming up next, we're going to take these foundations and connect it directly to our actual offering. That means we will be discussing all the different account packages available as WeMasterTrade, how they differ, how they design, who they design for us, and what kind of results you can expect from it. Now, let's we explore who WeMasterTrade and the principle we stand for. It's time to move into the ones of the most essential parts of the live streams on in-depth discussions on our account packages. This is where it all begins for most traders, choosing the structures that best align with their roles, their style, and their current skill level. And when we say packages, we're not just talking about the dollar figure, we talk about the frameworks. Each package as WeMasterTrade represent a different pathway toward growth, and today we walk you through all of them, what they offer, how they are structured, and most importantly, who they design for.
Exactly, they say at WeMasterTrade we don't believe in a one-size-fits-all model. That's why we build two district products, like for trader, the challenge package, and the instant funding package. It includes a variety of account size and configuration because we know that traders come with a different strength, risk capacity, and timeline.
And let's begin with the challenge model, a two-phase evaluation system built for traders who want to grow their skill before being allocated capital. Each structure and has become the most popular rule for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account and your goal is to meet a specific profit target while staying within strict but reasonable risk parameters. There are 3 stages in total, phase 1, phase 2, and then the funded stage.
Take for instance our $10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break this down phase by phase.
In phase 1, you need to achieve an 8% profit target with $800 without risking a 5% daily loss or 10% overall loss limit. You have unlimited time to achieve this. That's a key difference from many platforms, and we don't pressure you with deadline.
When you pass phase 1, you will move to the phase 2, where your profit target drops to 6%. That's secure. The risk will remain the same, and here is something unique. In phase 2, you already start receiving a 30% profit if you exceed the target.
And finally, once power phase clear, you enter the funded account when you trade with real capital, have no profit target, and your profit share turn to 90%. That's one of the highest in the industry.
And this is very ideal for newer traders or experienced traders who want to start with lower ratio and learn the system. If you are still refining your strategy and want to get feel for WeMasterTrade risk framework before scaling, this is a perfect package to begin with.
Now, for those who are confident in their strategies and want to start with a longer account size, we offer $25,000, $50,000, and $100,000 challenge packages. The structure is similar. Two face the same 5% daily and 10% total loss limits, but the profit target scale proportionally.
For example, in the 50,000 challenge, You need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same 1 to 100, giving you room to adjust position sizing.
And the 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you already passed all the broad challenges or have a strong verified trading history, it is a good setup.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable when you become famous and meet minimum performance conditions. And if things you don't use your ways, you are eligible for a 30% reset discount to start first. What if you don't want to go to full challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into place.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced disciplined traders the chance to trade real capital from day one. No evaluations, no demo stage, just full live trading, based by structured, fair, and transparent system.
And what makes it ever more accessible is that you can choose from several different account types depending on your style, reference, and goal. Today, we're going to walk you through it of 5 main instant funding packages: standard 510, 510 euro, 510 OBC, and customized. We'll compare the details, but more importantly, we help you figure out which package is right for you.
Let's visit the screen quickly. All of our instant funding packages give you a live trading access from day one. That means no challenge phase, no evaluations. You pay once, follow the rules, and you are trading like capital. And every account, no matter the size, includes no time limits, up to 90% profit share, scale up plan toward $1 million, support for EAs, swing trades, cappings, and even SFTs. Now let's go pockets by pockets. As we go, owners and Helens, I want you to jump in with the real advice. Who should actually choose quick ones, and what kind of trader you would suggest with it?
Let's start with the standard package. I always describe this one as the best friend for traders who want stability. You're getting up to 100,000 in capital with a very manageable 4% daily lot limit and 6% overall limit.
It's like that scam steady account that doesn't push you to overtrade, and with the profit split up to 90%, that's really earning potential even if you're talking slow and steady approach.
And how about the commission?
Competitive across the board, Forex at $4 per lot, Gold at $4 per lot, Indy at $1, stock at just 0.07 per lot.
And everything it allows: new trading, scalping, weekend holding, EA, SFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategies, want a full range of access, and plan to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their ads but don't want to stretch with a target-based challenge. And if you ever had an account low due to the unrealistic rule, you will find the standard model refreshingly fair.
And I also say it's a swing trader for the 4 or 6% risk profile gives just enough flexibility to hold multiple day position, especially with weekend holding fully allowed.
Alright, moving over gears, let's talk about the 5-10-10 package. Same capital sellings up to $200,000, but now you get the 5% daily loss and wider 10% overall loss limits. Why does it matter?
That execution is massive for traders who scale into position or take multiple in driver setup. You have more room to breathe, especially in high volatility market.
And the risk target is here, so here is also 10%, with a lightweight with the risk window. Plus, you can still get full support for scalping, EAs, new trading. It's very trader friendly.
This is bad for day trader, especially those trading assets like NADA or gold that move fast. If you got a test intraday strategy and just need some risk rating room, this is your package.
And also for traders who want structure but don't mind having profit target, the clear milestone motivates some people, especially if they are payout oriented.
Now, here's the personal favorites, the 5-10 euro. You get the 5% by lease and 10% overall loss, but no profit, I guess.
And that's a blessing for the high precision trader. No, you're no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency trader and sniper. If you enter from 3 or 5 trades a week, this is your space. You not a personal for patience. You actually reward for it.
Veterans wing trader, reconstruct trade people who prioritize consistency over speed. If that's you, choose right here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale out cleanly. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no PC remove the profit consistency tracking, right?
Exactly, same the 5 or 10 risk profile, but you're not required to keep your profit growth more.
That said, trade copier are not allowed in this one, so it's for manual trader only, and you need to trade responsibly. But for aggressive trader who sometimes hit big spike, this is play.
And this market are profile for high risk reward trader or anyone who had issue with consistency rule at other firm. You trade how you want, just keep it inside raw box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need and let's build it together.
You can adjust daily lot over lot to your liking, plus you can fund up to 400,000 or more than other account.
It's premium, flexible and come with all trading style below, including EAs, new trading, weekend holding, SFT and more. Advanced Air profile for top-tier professional, ex-hedge fund trader, signal provider, high-volume trader, anyone with a very specific structure in mind. This bucket let you build it.
And I always say, if you try our model and nothing quite fits, build to your own blueprint with a customized, that freedom is rare.
To sum up, every instant funding package we offer comes with a clear risk parameter, fair commissions, this market access, and real profit potential. There are no time limits and payout starts as early as 1 day in.
And no matter your strategy, copying, swing, or go, or manual, there's an account that aligns with you. The key is the picking right one now, so you can start building consistent from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dream. The right risk or way outperform the biggest roommate.
Up next, we will walk you through exactly how to protect your accounts, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright, traders, now that you've seen the packages, let's talk about the parts that either might make you or break your accounts. That's right, it's time to dig into the trading rules and how to actually stay compliant when you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their accounts is come down to one thing, the daily loss limits.
Yeah, the dreaded daily loss. It's the one rule trader think they understand until it keeps jump out of their account at 3:17 p.m. on a random still day.
But here the good news, when you understand how it really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So, what's the daily loss limit, also called maximum daily loss?
And it's the maximum amount of loss you're allowed to incur in both floating and closed trader. On any single trading day, if your equity fall below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's really important distinction and is what trips a lot of people up.
Let's walk through a live examples. Imagine at the start of the file, your balance is $105,000. Your equities, however, is higher, $107,000 because of open floating profit.
And if you're on 4% daily loss limit, we calculate it from of the highest number at $107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rate that a day can drop below the 102,000 or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold or for even a second basis.
Now let's reverse it. Say at the start of day 7, your balance is 100,000 but your equity is 99,000 because your open trade is slightly in loss.
Since balance is higher, we base the 4% on initial balance, so $4,000.
So now your equity must stay above $96,000 through Saturdays. If it drops to the $95,999, auto liquidation kicks in. No warnings, no margin call.
And what happens if you break it? The system will send a market order to close all trades. Everything liquidates, your account is disabled, and you can trade again unless you purchase a new package.
And here the kicker, the auto close happens when the system detects the result was crossed. But due to market fluctuation, your final P&L might look good than the actual result. That's because the system executes the closer based on price limit at the time of liquidation.
So if you only intend to take a $3,900 loss, once slippage spikes in goes on Nasdaq and suddenly it's a $4,200. That's why we say don't grab the edge.
Alright, let's talk about how to avoid violating this rule because this is where the broke mindset kicks in.
First tip, know your buffer. Never plan trade to take you right up to the edge of your limit. Let least at 10 to 50% room below the mark loss, especially in volatile market.
Tip 2. Check your equity, not just your balance. I can strategy now. No trader stare at their balance all day, but if your floating loss is grabbing your equity, you're heading toward a violation.
Tip 3 is use dashboard or trackers. Inside WeMasterTrade, we provide the dashboard that show your live loss status. You them, check them, and don't rely on memory.
Also, pro trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to trade your way back up.
Another big one, trade smaller during news hour. If you trade gold during an F3 with full loss side, you practically back into break the day loss rule, confusion side and rifle volatility.
What's the top biggest mistake you see when it comes to daily loss?
Number 1, over leveraging trader opening position that are 5, 6 or 7% of their account, thinking they close quickly, but if the trade turn red fast, it's already too late.
And number 2, holding overnight without check exposure. If you hold 3 trade overnight and wake up to 60 people, the daily loss could be heavy before you even you open your eyes.
And the third, assuming that close trades are all that matter. They are not. Remember, equity includes both floating and closed positions. The total equity lies in your score.
And I always say this to new trader, the daily loss rule isn't your enemy, it's your account error. It designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive only within the ball. And if you learn to trade inside that ball, you will last longer than 90% of the market.
And one last note isn't about rules, it's about trust. WeMasterTrade phone you because we trust that you will manage risk responsibly. The daily loss is there to protect the trust on both sides. And that's all about our packages and daily loss limits. Thank you for tuning in. I will be taking a short break and will return in just a few minutes to continue the live streams. Please stay with us and we will resume shortly.
daily limit, so I'm fine. But then a week later, they chip it away that their account and suddenly liquidation.
And the mark loss rule is the last safety net. If the daily loss is your daily seatbelt, then the mark loss is your error. If that limit is hit, it means the account is deemed unplayable under your current trade trajectory and explode immediately.
So what exactly the max lot rules? Let's define it simply. It's the total maximum amount you are allowed to lose across all traders for the entire account if your equities, that is your real-time capital, including open trades, ever drops below a certain percentage of your trading starting balance, your account is gone and period.
And unlike the daily loss with reset every day, this one doesn't reset. It commonly you can lose 3%, 2% one day, 3% the next. And if your total loss across the line, that's it.
And the percentage limit depends on your packet. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you start with.
Let's walk through a concentric examples. Suppose you have an instant funding account with an initial balance of $50,000 and your mark loss limit is 6%, which is $3,000.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday and the total loss from your highest point back down to the rest, so is what matters.
And remember, this rule includes both close losses and floating losses. And if you lost 2,000 into low trade and you have an order of 1,200 floating interest, your equity now at 46,800. That's below the limit account close.
And just to be clear, it's not about the net gains or loss across traders. It's about where your equity stands in real time relative to that stop loss floor.
And here where it gets interesting a little tricky. Let's say your account grew to 51,000 currently you in profit.
But your mark loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. Questioning how much room you have to fall before you hit it.
Exactly, you now have $4,000 in total buffer because $51,000 minus $47,000 equals $4,000. So your profit gives you a cushion, but the floor never moves.
And what happens when you break it? When your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation trigger, all trades are closed immediately at the market price.
And again, like with the daily loss, if their volatility or slippage, your account might close out below that line. That just execution reality.
And more importantly, one express that account is permanently disabled. You need to purchase a new package if you want to continue trading. No resets, no rollback.
Alright, let's get tactical. How do you actually trade inside rule without consistently worrying about it?
First, check your total close loss every day. You should always know how you close to your mark loss floor. Don't wait the dashboard warning, calculate it manually.
The second, use your profit as protection, not permission. Don't take locking profit as green light to increase risk. Instead, consider locking in green by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. If you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
4. Stay cool when you close. If you're down 5% out of your 6% limit, this is not the time to double down. That's the time to step away, pause, and retain your entry.
And the biggest mistake under intermittent floating drawdown, traders float 3 loser and think, okay, I still got room, but they forgot about the 4 trade floating minus 1,800.
Second, trader who trade recovery after a bad day, they lose 4% in one day and come back to win the next day thinking, well, they make it back, and instead another 2%, boom, violation.
Third, and this is one hurts, ignoring slippage during major news. Even with a tight stop, new candle can get you through your limits.
And the mark loss rule is here for a reason. It's not there to punish you, it's there to protect you from yourself. Everyday successful trader I know see their stop loss, whether personal or institutional, at a non-negotiable boundary.
Alright, it's a reality check. If you're consistently rushing up against your mark loss, the problem isn't the rule, the problem is your system or your psychology.
As WeMasterTrade, we are not just giving capital, we are teaching instructions, and the max loss rules is what separates gamble from professionals. So remember, your mark loss is percentage of your starting balance, typically 6% or 10%. It's calculated using equities, not balance. It includes both closes and floating losses. And once break, your accounts is gone. Coming up next, we will explore the consistency rules and why steady profit matter more than a big spike when it comes to growing, scaling, and getting back.
And if you ever make 5,000 in one day and then make 200 the next 4 days and wonder why your payout got flat, this timing is for you.
Let's dive into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we will talk about the daily loss limits, and we just cover the maximum loss rule, two pillars to protecting your capital. But now it's time to shift gears just a little and talk not about reach but about the results. Because here things is not just about the staying alive in the games. As WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do what? You need more than just a winning days. You need something called profit consistency.
And this rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader for eligible for withdrawal, profit sharing, and even scale up. So if you're fund and you're wondering why your payout didn't go through, that could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent, meaning you have one giant profit day, then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profit come from one day, that's not consistency, it's look or risk. What we want to see is trader who make profit day after day, even if it's small, that's what we can scale together.
And how it is calculated, the formula is really straightforward. Take your the bad trading day profit and divide it by your overall profit since you start the account, then multiply by 100.
So the formula is the best days divide total profits multiplied by 100 equal profit consistency percent.
And just to be clear, best day refer to your highest close profit in the single calendar day, and total profit is sum of all your close profits minus any close losses and open losses across the line of the account.
Let's say you have the following result over 5 trading days. Day 1 as 100, day 2 200, day 3 minus 50, day 4 100, and day 5 60.
That means your total net profit across 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
And your best days were day 2, that is $200 profit.
So now we apply the formula. 200 divided 410 equal to 0.487A. Multiply that by 100 and you get profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency with e-commerce. The trader is way above that, so they wouldn't qualify for a payout yet.
So even though the traders is profitable, they are not consistent enough. There has one big day that makes up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak for trader. If you are relying on one or two big days to carry your entry account, that's not professional trading. That volatility, you can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade is related to your consistency over time. Traders who show long-term balance are the one who gets scale up, who gets freer, who gets just with more capital.
Alright, so let's address the numbers. What's an acceptance profit consistency ratio?
Typically, the rule is that at 20%, that means your bad day should not exceed 20% of your overall profit. And how to improve your consistency? Let's say you're over the limit, don't panic. You're not disqualified, you just need to keep trading even out the curve.
And here how to do that. Trade smaller size for a few days. Take smaller control wins, aim for 2% at $200 or $300 days. Avoid big swing trader that could spike your ratio again. Spread profit across multiple days, not one month setup.
And for those using EA, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The box might be profitable, but it won't pass the rules unless it's configured with payout logic in mind.
And here are common mistakes to avoid. Mistake 1. Trader hitting targets early, then taking the rest of the reserve. That inflate your bad day and leave the rest of your curse lap.
Mistake 2. Over trading after a big day, thinking I'm safe now, and trying to squeeze more instead of averaging out that higher ratio.
The mistake 3 is thinking the rules is just harder. It's not. It's a reflection of what we actually look for in our master trader.
And why this rule matter? At the end of the day, this isn't about controlling you, it's about build habit that can handle scale. And if you can be consistent with $50,000, what happens when we give you $100,000 or more?
Exactly, consistency is what makes you say to invest in. As we trade with fund trader, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it times and time again. The traders who respect these rules, they are ones who get multiple payout, referrals, and grow it into six-figure funding accounts.
So don't fear this rule, understand it, use it as a feedback tool. If your ratio too high, right, that means you got profit. Now keep going, balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculate your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volumes, and to keep your best days under 20% of your total profits. Spread your wins across multiple sections and monitor your progress in the dashboard. We've talked through the daily loss limits, tackle the maximum account loss, and examine how profit can track your long-term payout and growth. And now we'll arrive at the final and perhaps the most overlooked rule at all.
That's right. Traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you can risk from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable you ready and how professionally you're managing your position sizing. And if you're serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, bulk losses and floating losses, even fee, commission, and swap are counted.
And for some account like the 510 novice packet, this rule got even stricter. Then the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcomes, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that's makes you hard to scale.
This rule protects both you and firm. It helps reserve capital, prevent loss, equity swing, and make sure your egg plays out over time.
Think of it as your account heartbeat. If your position size pull up and down as your profile loss one day, 5 loss the next, the system flooded. It's not structure, that's cover.
This is where it gets technical, but stay with us. The term trade ideas isn't just one other. It's a group of trades that share the same logic.
And if you open 3 buy position on growth at a different time, that's one trade idea.
Because it's the same symbol, same direction, and flow around the same time. Even if you open them at different time, they seen as a single and 5 position from the risk perspective.
So the system doesn't look at your trades in isolations. It groups them into logical bundle and apply the 2% rules across the entire bundle.
And you can have multiple separate trade ideas as long as each one respects the risk limits.
For example, if you go long on gold, short on GDP JPY, and short on AUD USD, and each position has its own distinct direction in the set, there are 3 separate trade ideas, and each one can bring up to 2%.
Let's say you go buy on gold and then you go buy against and against. Now you have 3 open positions in the same directions on the same axis.
Yeah, this is some trees that's as one trade idea. So if you combine floating risk or even to a loss from the dough position is 2% of your starting balance, boom, you've broken the rule.
Let's go hand on. Suppose you have an $100,000 account. The 2% market purchase idea means you can't lose more than the $2,000 on any trade idea total.
So you open 2 growth by 1 lot each. You don't play a stop loss, new hit, market drop 100 pips. Each lot lost at 1,000, that's to 2,000 total.
You're right, underline. If sleeper swap at a few extra dollars, that's it. Rule broken, account flagged and liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funded status or immediately closure.
And here are some pro tips to stay risk consistent. Tip 1. Set your loss size based on your account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously, set them based on risk per trade idea, not random chart level.
Tip 3 is don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade idea mentally. If you're entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it small, scale in smaller, use micro loss if needed. Keep your total approach below 2%.
And some common violations. And stacking up multiple and try no one trade ideas. Thinking is still separate.
Second, opening high risk trade after win, assuming they playing with how many spoiler the market doesn't care.
Third, neglecting a floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
And this isn't policy, this is a professional, practice, hedge fund follow this, bank follow this, real trader follow this.
Exactly, we're not here to micromanage you. We're here to protect your account, our capital, and integrity of this community.
And traders who internalize the rules, who understand that small, consistent risk is the foundations of scalable capitals, those are the ones with growth. Those are the traders who go from $25,000 to $1 million.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they're risking on every trade every day.
And if you're still guessing your loss side or opening trades because setup feel right, take this at your side, set it up, get struck.
And this more than the rules, it's a habit, built now and the path to bigger capital and larger payout become way more predictable. And that's, my friends, wrap up to the 4 essential rules of trading at WeMasterTrade: the daily loss, maximum loss, profit consistency, risk consistency. Master it, and you are not just staying compliant, you're building a foundation for zero capital management, long-term payout, and scaling. You're watching the official WeMasterTrade live streams, and the best still come. Alright traders, before we end these live streams, we want to bring everything full cycle, because today wasn't just about telling you how WeMasterTrade works. It's about showing you what's it meant to trade with qualities, with capital, and with confidence. We would walk you through the packages, rule, platform, payouts, but now let's zoom back out and ground ourselves in what the world is doing today. The market isn't pausing, the news keep coming, and as a fund trader, your eggs come from staying prepared, not just with setup, but with context. And here's the market news for today.
And today in September 2023, global markets are focused on a series of PMI releases for Europe, the UK, and the US, alongside key speakers from central bank and political leaders. These events are shaping investor sentiment and creating potential trading opportunity across major currency. For the Eurozone, as France, manufacturing PMI the 50.2 above period the 50.4 small uptick. Manufacturing is holding just above the 50 threshold, meaning only very slight growth, not strong enough to trend the market sentiment but avoid the congestion. For the service PMI, 49.7 below 50. This is key as service dominate as French economy. Wicked here signal demand side pressure and slowing regional activity. For the Germany, manufacturing PMI at 50. Germany manufacturing weak work contracting in now stabilizing at neutral. Positive at birth ratio. For the service PMI as 49.5, service remain in the contraction. That's concerning because service usually provide balance when manufacturing struggle. And the Eurozone is hovering around stagnation. Manufacturing is trying to recover, but service are dragging the economy down. This was a weak consumer demand and potential energy structural challenges. Euro outlook neutral to bearish. Trader may stay cautious ahead of ECB policy signal as the data do not support tightening. For the United Kingdom, manufacturing PMI at 47.1. stay deep in conjunctions, reflecting resident weakness in production, new order and export. Survey for PMI at 53.4, still in expansion but slowing, suggesting demand is shorting. The U.S. economy relied heavily on service. The drop in service PMI suggests momentum is cooling, while manufacturing continues to be the drag. GDP outlook are slightly buried. The data reinforce expectation that the pain of England may remain caution, especially with the inflation concern easing. For the United States, manufacturing PMI at 52.2 are still expansion but missing expectation. This shows relation of top role in monitoring. Survey PMI at the 54 are still strong, meaning the largest part of U.S. economy is expanding at the healthy pace. And President Trump speak at the 8:50 p.m. Political remarks may add volatility, especially if trade, tariff, and fiscal policy are maintained. The fragile core with volatility risks. And summarize the data highlight a fragile euro, a slowly UK economy, and still resilient United States. This keeps the USD supported while euro and GDP remain under pressure. Traders should be cautious and expect significant volatility during Fed chair Powell speak later tonight. We could set the direction for the market in the coming day. That's all the news for today.
That's a wrap up for today's live streams. I truly appreciate each and every one of you for tuning in, enjoying and spending your time here with us. Your support means a lot and keep me motivated to keep bringing you more content. I will be back again soon with more update and insight. So until then, stay safe, take care of yourself, and I will see you next time. Goodbye and see you again.